Hi guys, I am VP. In this video, we are going to see the Chapter 8 in the book The Intelligent Investor. The Chapter 8 is The Investor and Market Fluctuations. Okay, let's get started. This chapter is all about a guide to the investor who is investing in the market fluctuations. Graham says the market will behave like a pendulum swing. It will go high, come down in a small swing or a wide swing, but the investor should know how to make profit out of it. The wide swing may happen to indexes or the individual stocks also, but the investor should aware of how to make profit in it. Okay, Graham says there are two ways one can make profit in it: by timing the market or by pricing the market. Okay, now let us see what is by timing the market. The Graham says the market is behaving like a pendulum swing. It will go up, come down, and go up and come down. By timing is nothing but the investor should ready to buy the stock or index at the low and sell high. It is nothing but buy low and sell high method. But the investor should aware of which is the low point and which is the high point, so that he could not be fooled by the market. But Graham says this is the toughest one an investor could do, because no one can predict which is the low point and which is the high point in the market. Graham also says that this is a technical view of approaching the market. Graham says about the Dow theory. Dow theory is nothing but a higher high and a lower low. Make a ABC pattern to indicate that the trend is over, or a consolidation pattern. In another video, we can discuss detail about the Dow theory. Okay, now let us see the second point. It is by pricing the market. By pricing the market is nothing but one can arrive at intrinsic value for a company or a stock, so that he can wait until in the market wide fluctuations the price can come under it or at the band value of the intrinsic value, so that one can buy it and hold till the upswing to make profit out of it. Graham says this is a fundamental way of approaching a market in a wide swing. Okay, intrinsic value is nothing but the true value of the company. Okay, in this chapter, Graham says about some old examples which is happened in the US stock markets between 1920s and 1950s. Okay, now we are in 2023 September 11. As of today, Nifty 50 benchmark hits 20,000 all-time high today only. Okay, fast forward 2 years back at COVID, the index crashed almost 30%. But everyone in the market is so panicked and selling whatever the stock he has in the portfolio. This is what Graham says: at the market fluctuations, the intelligent investor, one who have confidence in the company, if the company is large, prominent, and conservative in finance, he should accumulate that company at the discount value, so that if the business doing good in the long run, then automatically the share price will evaluate according to it. This is what Graham says the fundamental approach in a market wide swing. Okay, now let us see why Warren Buffett says this chapter is an important chapter that everyone must read. This chapter changed the Warren Buffett's view and ideology of the market's approach, because before studying this book, Warren Buffett was in the market for 7 years, but he never knows the business behind the stock name, so that he is also tend to speculate in the market. After reading this book, Warren Buffett seeing the business and the value behind the stock price, so that Warren Buffett insists everyone should look the business behind the stock name and the value behind the stock price. Okay. Now let us consider we are buying the stock at the lower range of the swing, and if the swing moves toward the high, we have two choices. One, we can book profit or we can accumulate more shares. If the stock we are buying is large and conservative in finance, then if we believe that the company can grow more from here, we can accumulate the stock. But if we buy the stock for swing trading purpose, then it is advisable to book the profit and keep the profit amount aside. Okay. Now let me conclude this chapter by saying the important point that don't look at the share price, look at the value behind the company, and don't look at the stock name, look at the business behind it. Okay. In the next video, we are going to see the chapter 9. It is the investing in the index funds. Stay tuned. Thank you.